Markets are bouncing ahead of the Fed meeting next week. So let's jump in, take a look at what's going on. Got a nice little update today for the markets. Currently, it is about 3:30 Eastern Standard. The Dow is up 1.5, S&P up 1.4, NASDAQ up 1%. Inflation is the topic of the day as the Fed gets ready to meet. They're in their blackout period, so no more Fed talk, no more talk of potential slowing down next year. We've gone from pivot reversal to stopping to slowing down. The Fed's kind of evolving their language as we continue to prepare their meeting next week, Tuesday, Wednesday, and we'll get the decision. Most likely it'll be another 75 basis points rate hike. And they will probably maybe give some guidance on the next rate hike, but most likely what they'll say is we're going to be data dependent. So let's just jump in, take a quick look at the charts here. The Dow is leading the pack with a nice little 9% bear market rally. NASDAQ is not too far behind. Everybody kind of bouncing in that. We'll look at that weekly moving average here in a minute, 9.79% for the NASDAQ. The S&P has had a nice 8.9% bounce here. Bitcoin's still kind of hanging on and doing its thing, consolidating sideways in that tight little range of around 18.2 to, well, the upper bound range is 20,400, but most recently that 18, 19 and a half range, 18 to 19 and a half range. So just kind of going sideways. A lot of people got excited over the weekend with this little bounce here, but just continued to work its way back down. Still well below the 200-week moving average, while the Dow Jones has reclaimed the 200-week and then some. NASDAQ just got above the 200-week, was rejecting on it. S&P back above the 200-week. And then if we go back and look at the March high, well above the March high for the S&P, NASDAQ well above the March high, and the Dow Jones well above the March pre-pandemic high, February, March timeframe. So those are kind of the critical areas to watch for the markets. And then the real question is this a rally that has legs? Is it going to continue on? Or is this just another bear market rally getting ahead of a little bit more downturn? And most likely with the Fed continuing to hike, this is just a algorithmic trade setup where the algos picked up the word slowing or whatever they picked up in the speech last week from the Fed. That's what drove this rally here. And it's in line with these other bounces that we've had along the way. So most likely we should see this start to reverse ahead of the Fed and kind of work its way down into the Fed interest rate hike next week. So right now, kind of hard to expect any more continuation or new highs. I guess it could continue a little bit, but to expect it to break any of these other levels right now just doesn't seem likely with the Fed continuing to hike, with inflation front and center like it is, top of mind, especially if GDP numbers come in strong, labor markets come in strong. The Fed knows they still have a lot of work to do, and they've sent that messaging out. The housing market is still stubborn. Not a lot of inventory. Prices are adjusting, but there's still very competitive markets out there where properties are selling in days, getting multiple bids. So Fed still has a lot of work to do. Some of the Fed members are continuing to put out the message that we have a lot of work to do. They're certainly not going to be happy about the market rally. So they're going to push back against that. Powell's going to come out and say nothing has changed in his position from Jackson Hole and from his last speech. They're going to be data dependent. They got to get inflation down. That's going to be the talking points, talk the market back down. So will we continue to see a nice little rally ahead of that? Or will the markets start to unwind and start to price that next rate hike in throughout the rest of this week going into next week? So we will see. All we can do is watch and wait, and I will see you in the next video.